Hi everybody, I'm going to go over a trade on gold, and it's intraday trade. All right, it's an intraday opportunity. It's actually a counter trend opportunity. Um, so what happened was you have price came to this level right here, right, and you see that it was 22.92. So this is the support level. It went to 22.92, pierced it. When it pierced the level, right, what happened? There's only two things. It's going to break out or break back in. So it attempted to go down, and this was looking like a big red bar, but basically that right there is buying. So the biggest volume, 3 times normal volume in this Renko candle. So they tried to break, but buyers stepped in. So you see that here there was some accumulation right there at the support level, and it's also visible here in the buying, where you had the biggest volume, and I think you had 1.3 times the volume. So after that, I just looked over here on this chart, and 2.6 times average volume right here, right there. And then you have 1.9. So basically the market's not ready to break down. That's what this is saying. After that, market pulls back, and here's the reaccumulation right in here. You see the white boxes, right? The white boxes, they were reaccumulating this level. As it pulled back, the blue dots are just high volume. This is high volume. Right? So just buying at support, and then they ran it up. And now price, is coming back to these prior highs. So that's it. That's all there is. You have a level, support, resistance level. It's either breaking down or breaking back in. If it's breaking back in, there should be accumulation. Accumulation was found. That's why I use these two types of charts, by the way. There are two types of charts that I feel that are pretty good at identifying accumulation. Basically, you just need to get the time element out. Any chart that doesn't have the time element and has only the price element, you then add volume, and you're able to see volume at the price. But you got to get rid of the time element because it's going to mess things up. Right? So this is the level. Here is the buying. Then the proof of price going higher, because what happens after accumulation? Markup. What happens after distribution? Markdown. So you need evidence of that in order to buy the pullback. So you got a level, people are buying at that level. Then you have evidence in terms of marking up prices, and you get in on the pullback, and now you're out near the resistance. All right, so this is an intraday trade. I'll show another one that didn't work. So this is the ES. The E actually was, one may say it kind of did work, but anyway. This is right here, 51.54. Price cracked it. You see what happened at that area. You should have high volume. Blue dot at the level. Regular blue dot means could be anything, could be buying this, whatever. But basically 5.7 times average volume. 5.7 at resistance. Now obviously they're breaking through resistance, right? but it sets up a nice trade on the downside. So you go to it, where the hell it was. All right. So this was the move, the change of behavior. Okay. Now the only problem is, because there was some fundamental news, they went above the high of the change of behavior and then sold. So they faked out the change of behavior, because the distribution has taken place, the selling comes in, but this is an upthrust after distribution. So this one, this little wick above the high, is this. That's the upthrust after distribution, and there's nothing you can do about it, other than have small risk and then re-enter on another opportunity. And then they took it all the way back down until it went to a support area where buying came right back in. Right? And now they're going back to the resistance area. Now I want to see if they're going to sell this resistance, because they sold it last time. Now, if they sell the resistance, it'll set up the trade on the downside. So that's all, folks. Have a good weekend.